If you look at the economic data, we had the two big indicators of where the economy is going, which is this ISM report on the manufacturing and service side, really strong on the economic side. And then you look at the jobs report, and the most important question is, are they going to change? Is that report going to change what the Fed is going to do? Absolutely not. And are wages becoming a bigger problem? It doesn't appear so. So it's been a pretty good week in terms of the overall economic data.
But are we in a situation now where good news on the economic front is bad news for the stock market, because that sends a signal to the bond market where you take profits there, yields go higher, and that's a headwind for stocks?
Yeah, I think the big data item or the big line item is what happens on wages. If we see the inflation number picking up, then strength is a problem. But if inflation remains contained, then strength is just good news.
Jurrien, what are we to make of this kind of tale of two workforces? On the one hand, there's one group where, yes, wages are getting higher, the unemployment rate is down, but then look at the labor force participation rate not budging. Discouraged workers still discouraged. What happens to that group of people, which is of substantial size, and at a certain point, does that start to become a real drag?
I think what the Fed is probably betting on here is that maybe the NAIRU, the level of natural unemployment, is maybe lower than we think for exactly that reason, that there are still discouraged workers out there. And I think that's one of the primary reasons why the Fed is in no hurry to get from maybe modestly behind the curve to well ahead of the curve. So I think the Fed is kind of in a sweet spot here. You know, it's hitting on both of its mandates. We got full employment, more or less. We've got stable inflation. And that's why I think the Fed's going one hike per quarter. They're probably still about 3 hikes below what we call the natural rate or the neutral rate. And at this point, by the end of next year, they'll probably be where they want to be. But it's, in terms of time and level, they're still somewhat accommodative. And I think one of the reasons why they are comfortable being there is the one you just mentioned.
I think one of the reasons why there's actually a good news story here, if in fact the economy runs a little bit hotter, which is if wage inflation goes up, that means that the working guy is getting a raise at the expense of corporate profit margins. And to the extent that you've had this widening out for a very, very long time between the haves and the have-nots, a hot economy actually brings that back together in a somewhat natural way. And so, it really could, in fact, help policymakers out.